All right, let's get this thing started. So, I appreciate everybody that's here. We haven't done one of these trainings in a while, but I wanted to kind of get back into a cadence on just some short mini trainings that are centered around real estate investing, specifically into multifamily, and 15, 20-minute conversations. We'll wanted to do them live instead of just recording them on our YouTube channel because I want to be able to interact, have people ask questions, things along those lines, and hopefully it adds value to you guys in the long run. If you can't make it to these, no worries. Try to put them in the middle of the day so that people can maybe get on their lunch schedules. But I know this is right in the middle of the work day, so we will take these recordings and post them on the channel as well, so you guys can go back and watch them afterwards. So today's topic, love this kind of niche, multifamily specifically, but we've even drilled down into why 10 to 60 unit multifamily is the sweet spot for investing, especially in our area. We're in the kind of Roanoke, New River Valley kind of demographic area, and not a huge metropolitan, but there's still a lot of multifamily around. And I want to talk through why we focus on 10 to 60 unit multifamily properties. This goes for what we invest in personally. It goes for what Haven does with their turnarounds and management, as well as what we acquire, find, and fund through our 90-day multifamily sprints. So let's get right into it. So, number one, the biggest reason, and this goes for multifamily in general, but the biggest reason why a 10 to 60 unit multifamily stands out is because it's still big enough to create real wealth from. I was in the single family game for a long time, scaled that up to 10, 15 units, and then started to see through the weeds and kind of some of the limitations on that stuff. And in single families and duplexes, they're a very good way to get started, but they're really hard to scale efficiently. One vacancy in a duplex is 50% vacant at that point. You've got one major repair, heat pump, roof, something like that completely wipes out your cash flow from that year, excuse me, either that year or maybe even a couple years, behind that. You're completely using all that cash flow to pay for those big repairs. And then you need a lot of scattered properties to build a meaningful income. So when you get into the 10 to 60 unit range, that risk spreads across multiple tenants. If you've got one unit that goes down vacant or is getting turned, or they stop paying their rent, unfortunately, you've still got, nine other ones or 50 other proper tenants in there that are kind of cushioning that blow from the rents. The cash flow becomes more stable. Again, you have more people paying rent every month. You don't have as many lulls and like vacancies, and it doesn't kill your income because you're at a larger scale unit wise. And then your operations obviously also become more systematized. So you have, usually a third party manager or a professional property manager on your team, and they're actually running that thing like a business. You're operating a business in these. So, 20 unit deal is really a small business in disguise as real estate. We'll get into some of those differences here in a minute. But that's why I really love them. It's almost like we're going out and buying small businesses. They're valued like businesses versus the comps from Miss Lady Jane down the road that just wanted to get out of her property and she sells it for $100,000 less than what she should have. In single family, that directly affects the value of your property when you go to sell it. When you're in multifamily properties, specifically anything like above 4 units, but really when you start getting in this 10 to 60 unit range, it's valued based on the income. It's not valued based, well, your net income, but it's not valued based on what the one sold down the street. It's specifically valued on how you operate that, how well the property operates, and then you can hand that cash flow off to another investor, and they're willing to pay a specific amount because of the operational capacity of it. So that's number one. Number two, financing works in your favor a lot more with these multifamily properties. So commercial lenders, like we said, care more about your NOI. That's your net operating income. Your DSCR is very important. So that's what your ratio is for what your NOI is and what you're paying out in debt. And then your property for performance. It's not just, when you go to get financing on those types of properties, they're not looking at your personal assets. They're actually looking at how the property performs. So you're not going, it still matters what your credit score is. Don't let anybody tell you different. It still matters if you have assets. You can get the loan a lot easier, especially if you're having to be a guarantor on it. If you have other assets to back this up, but the bank looks at these commercial properties, these multifamily properties, and they say, well, it's creating this much income. As long as we can put an operator in place, like property management, something like that, even if this guy defaults and he walks away or he has to file for bankruptcy, we can take this property back and it's still making money. And we know that we're able to sell it because of what the operational numbers are for that. So, as operations improve, the income improves, the value improves, your financing opportunities improve. And eventually, with those properties, you can refinance them, pull out your equity tax free, and then hopefully recycle that capital into more deals. And that's how portfolios really scale. So the third thing that we run into a lot is in this 10 to 60 unit range, it seems to be like there are a lot more mom and pop operators that, bought these properties when they were cheap. In their day, it was probably still expensive, but they bought them a long time ago. They got into them pretty cheaply. They were able to self manage them, or had a third party manager do those with them. But what we've noticed is as they've aged out, or they've handed them off to their kids who didn't have anything to do with the properties to begin with. There's a lot of deferred maintenance that gets stacked up. The rents are below market. The bookkeeping's usually poor. There's no utility bill back system because they don't really understand that they can do that with leases and things like that. Their leasing systems, when it comes to like marketing and things like that, um, they don't have properties on Zillow. They've just got a sign in the yard. They've got it on Craigslist versus sending it out to all these other rental sites where we get our leads from, specifically Facebook Marketplace, Zillow, stuff like that. They're not using those systems. So all of that, creates higher expenses. It creates less income, and those are the opportunities that we look for when we're looking to find a value add multifamily property. So that creates a lot of opportunity. These have been either mismanaged or just haven't kept up with the times over the years, and we take that as an opportunity, and then we can come into it, put professional management in place. Lift the units up by doing some deferred maintenance or upgrades that current people want to see amenity wise, and then get the rents back up to market. Hopefully, get the expenses lower as well, and then we get to benefit from that gap in the operations there. So the other thing, around that is when we talk about the NOI and the value that we're able to create for every dollar of NOI that you create. Let's say it's a 6.5 cap rate. I'm not going to get into cap rates today. That's a whole nother thing. But if you're selling this property or valuing this property at a 6.5% cap rate, um, for every $25,000 that you can increase the NOI by, you're creating $385,000 in value. 25,000 NOI sound like additional NOI sounds like a lot, but when you start getting into 10, 20, 40 or 50 unit buildings, like doesn't take a lot to add $25,000 to the income. And that's either by, like we said, raising rents, or just getting them to market rates, or also making your expenses more efficient, or creating opportunities where you can bill back utilities. You have less vacancy because you have a better management team, turning the units, and you're leasing them out, like we said, on Zillow, apartments.com, Facebook Marketplace, things that people are actually looking at, so they can get people in quicker, which means you get more income for the year. So that $25,000 increase in NOI, roughly $385,000 in value, and that's like, heck yeah, like we want that all day long. And then the final most important piece here that I think everybody sleeps on in this area, they either are too scared to get into this unit count range. They either don't have a team behind them, or they just think it's too big. They don't understand how the deals are put together. Those smaller investors never make the jump from even a lot of times single family up into duplexes, but even the duplex, triplex, quad investors, a lot of times they don't want to get into these 10, 20, 50 unit properties. And then your private equity institutional money, the REITs that you see out there, the guys that are, they talk about BlackRock, like all these companies that are just buying up apartment buildings and come in and throw a ton of money at it. They're too small for those investors. So the small mom and pop guys don't want to mess with the larger units, especially these days with where rates are and where prices are. And then the big institutional guys don't want to come down below 100 units a lot of times, sometimes even 150. So there's this sandbox there where there's less competition. There's still a lot of demand for it. It allows you to, kind of cater to that workforce housing, which trending these days, workforce housing is going to be something that's much needed. That's when we talk about lack of housing, we're not talking about class A brand new apartment buildings. We're talking about the workforce, teachers, bus drivers, your firemen, your police officers, people that work like decent jobs, but they're not able to afford 2 grand a month in rent or 2,500 in rent. They're looking for that 1,000 to 1,500 range. They need to be able to put their family in a 2 bed or a 3 bed or something like that. That is going to still have a lot of high demand in the coming years. And when you look at the private equity guys, what they're building, what they're taking over, they're really in that top B, A class larger apartment complexes. The small mom and pop guys, they're still in the single family, they're in the duplex, triplex, quads. And then there's this sandbox that we're playing in, doing value add properties, taking something from a D class or a C minus up to a B class. But the fact that we're buying an existing structure and just doing our value add property, we're still able to keep those rents in a manageable place to keep occupancy up and things along those lines. And I love the sandbox that we're playing in. So when it really comes down to it, there's a huge opportunity for local operators in this market, 10 to 60 units. That's where we're operating in all day. Sounds big, but when you have the right team in place and you have the right strategy and the right capital stack and you know what you're doing, what you're getting into, it's something that create a lot of wealth for you over the years. So with that said, if you're interested in getting into deals like this, you've never done it. Maybe you've been in the single family space for a long time, or you've done some like duplex, triplex stuff, or maybe even you've got one multifamily property and you just feel like you could operate it better. We run a 90-day multifamily sprint about every quarter. We just filled up our last one with 4 people. And what we do in that 90 days is we teach you how to go from finding the property to funding the property to executing the property and operating it. However, we do it with you. So that group actually forms an LLC, and then we come on as your operating partner and we help you find the deal. We learn actually doing stuff hands on. We actually just got back from walking a property today for this cohort 18 unit property. Needs a ton of value add. Don't know if it's going to work out because they want more than they want the price for after it's stabilized and the work's already been done. But it's great to get in properties, walk it with an operator that knows what they're doing. And then after we close on it, my team under Haven Management Group actually runs the property for you. So you can get into a unit like a deal like this 10, 30, 60 unit deal without having to create a second job for yourself. And you've learned how to do it through the process. So that's my shameless plug. I hope this was valuable. We really believe in this 10 to 60 unit range, especially in kind of secondary markets. It's works everywhere, but we're in kind of like rural part of Virginia, and there's plenty of pockets that have a lot of population, pretty decent income base, and don't necessarily have the 400, 500 unit apartment building complexes, but there's a lot of these that are kind of coming due. People are, the silver tsunami or the baby boomers are starting to age out. They're wanting to get out of these assets. They're trying to retire. Their kids either don't want them or their kids have already taken them over because they were either inherited or something like that. And they're like, I don't know what to do with this. I don't want it. Let me sell this to an investor or an operator that knows what they're doing. So, lot of value here. Like I said, we're going to do these every other week. These trainings will have a different topic every other week. I'm going to start bringing Christy in, who's going to be a partner of ours, to talk about some of the smaller units because there's nothing wrong with single family. There's nothing wrong with duplexes. There's nothing wrong with quads. It's just a different strategy. So she's going to bring on. She's the house hacking expert. She's going to start doing some trainings in here as well. And if you're interested in the 90-day multifamily sprint, make sure you reach out to me. We can set up a call. We can get you on the wait list for the next one. And then when we open it up, we've only got 4 seats per sprint. So they go fast, usually within the first 4 or 5 days. But we're rocking and rolling. So hope you guys enjoyed this. Have any questions, leave them in the comments and feel free to reach out to me anytime.